Okay, so someone recently, they asked me the question, an always in question, and basically the question is, they're in the trading room and they see Al. Al will say it's always in long. Price goes up 2 points. Then price goes down 4 points, and the Al goes always in short. And this guy's, basically saying, what the heck do I do? Because, you know, by the time Al says it's always in long and I buy, and then he says always in short, and I short, I've already lost money. Yes, that is the truth. You know, you have to understand that what Al is the. Before I say anything, let me say this. I'm biased, but I think he's for sure one of the smartest people I know with price action. Hands down, probably one of the best teachers I know of it too. And then again, I'm biased because I've learned nearly everything I know about price action because of him. And you know, but one thing I've learned about the trading room is this: he is trading from his perspective. So he is not swing trading; he's looking to scalp. So you know, he's gonna say, okay to short below, but probably buyers below. I'll wait for the breakout. He'll short down here for a scalp, and then he'll look to buy up here. Well, he's not trading always in. He's not physically, he's getting out. He's already out of a long by the time this situation arrives of getting out below here. Let me go ahead and read this person's question just so everyone's clear on what I'm talking about. He says this: can you talk about the difficulty I'm having with always in long, always in short as a useful trading tool? Watching Al in his daily form, he declares if the market's always in long or short. So watching Al in his daily form, he will declare whether or not the market's always in long or always in short. As an example, I've seen Al declare at the moment as being always in long, and he'll probably say you can buy for any reason. So you can take the long position then. The market goes up for 2 points, then down for 4 points, and it's only after this big move against you, which is strong and obvious enough, that Al declares it's always in short. So what's the point of taking trades from an always in long determination if by the time the status flips your trade is already underwater and you've lost money? I find that always in long is useful for scalping, but not swing trading. But maybe I'm missing something. Yes, you are missing something. Think about what you just said. I find it useful for scalping. I find always in trading useful for scalping, but not very good and profitable for swing trading. Well, what does that tell me? That tells me you are not getting out at the right places. If I had to guess, you're buying, you're not getting out here, you're getting out somewhere down here, missing, and then you're possibly shorting, taking a loss, not getting long up here, and you miss two things. So, yes, the reason why you find always in useful for scalping is because you're buying and getting out, and then you're able to process. Maybe you short, you scalp, then you buy, you scalp out, you buy again, you scalp out. Maybe you even buy and scalp, buy and scalp. Well, yes. Here's what I would do. Number one, it takes a long time there's no magical way of when to get out with always in. It takes a long time to fully understand that, to fully get good at that. So this goes back into kind of what I say a lot is, if I could go back in time, here's what I would do. I would trade really small. Number one, I would do that no matter what. Number two, I would find the always in direction. Okay, and I would really focus on not buying too high and selling too low. And I would say, okay, always in long, I'm going to buy and I'll just go for 4 points. I'd get out. I'd say always in short, I'll sell and maybe get out below here. Always in long, I'll buy, try and get 4 points. I would just focus on trying to get a few 4-point trades a day and not be in a rush to get every swing. Once I did that, and I was able to at least get in and scalp out, or get 2, 3, or 4 points, the next thing I would do is this. Actually, I want to take that back. Let me start over. I would trade small. I'd say always in long, buy here, stop down here. I would not get out below here, and I would pick a place where I think it's best to get out. Okay? And I would say, okay, bear bar, I've made a lot, I'm gonna get out here. And I would just play the game, keep it real simple. Until it's clearly always in short and price is clearly falling below this stop, I'm not gonna sell. I know you're thinking, gee, Brad, that's, but what if we just plummet down? I might miss 8 or 9 or 10 points. You're right, you might. The worst thing you can do is go back and forth. You buy here, you get out, you go short here, you get out, you buy here, and you hold long, you get out, but then you buy again, and then you wait for this day. It's very hard to do. It's very, very profitable, but it's very hard to do. So my advice would be take it slow. Kind of like training wheels on riding a bike. There's no problem in taking it slow. Most people mess up with always in because they try and do too much starting out. So number one, here's the reality. When you get a strong breakout, usually there's a deep pullback, and usually it's better to buy the pullback. Well, so think about that. When you get a breakout, usually there's a reversal attempt or a failure attempt here. That failure usually turns into a breakout pullback. So breakout, pullback, and buy setup. It's not that always ends very profitable, but you have to know where to get out. It's kind of like you got to know how to flow with the market if you're going to trade always in, strictly speaking. And then what you're talking about, if I can find a good example, is here's a great day for example. Always in short, sell for any reason, but then bulls get out, bears get in. Always in long, buy for any reason. But bears get out either here, bulls get out here, or here, definitely below here. Probably always in short below this bar. If I had to do anything, I would sell. But it's not clearly always in short until somewhere down here. So you have to understand that. I know it's kind of complicated to think about, but that's the reality. You have a micro double bottom, a second entry buy at bottom of a trading range. If I had to do anything, I would buy, stop somewhere down here. But it's very weak, so it's still always in long, minor always in long. I like to use the term when I'm trying to describe this as major and minor. You've heard I'll say it, minor reversal. Lower low major trend reversal, but probably minor reversal. So bear trend line break to a new low, probably minor, probably need something like this. Well, same thing with always in. The reality is bears are going to sell and they're going to stay short and keep their stop up here. So it's still always in short. However, a lot of bears will get out and hold long right here. So it's still always in long, but then the bears got to get short again. So think about it this way. It's transition. You've heard the saying, the skunk in the road is bound to get, killed. Well, or maybe the sayings, if you sit in the middle of the road, you're going to get hit and you're going to get killed. Well, that's how always in works. There's 2 exits. You get out quickly or you hold. And, that's really the reality of it. So what do I mean by that? Well, let's start with the get out quick. Let's start with the get out, you hold. Okay. Let's start with that. Always in short, stop up here, put your stop up here. If you don't get out up here, you certainly don't get out up here. If anything, you get stopped out above and you sell again below this bar, stop up here. We sell off. Okay, stop up here. Sideways, new low, move your stop. More up, more down, move your stop. Do you get out below here? Maybe. And then you get stopped out here and you sell again below and all that. You buy here. You don't get out here and here. You keep your stop down here, new high, put your stop down here, another new high, stop down here, and you exit somewhere over here. That's difficult because you can lose a lot. The other choice is what I always talk about. You sell, you get out, go long, and you get out of the long shorts, you get out of the longs, you try to get short, maybe below here or possibly below here. You get out of a buy, you go long, second entry buy, but then weak, it's weak, 50% pullback, you got to get short again. So it's about the market cycle. You got to understand there's no always in reversals have to do with if you were forced to enter at this second, what would you do? That's how it works. And it can be both at the same time. Great example, second leg trap, trading range day. Just because it's always in short doesn't mean you should sell at the bottom of the trading range. So here, first time we touched the moving average in quite some time, nearly 2 days. We're below the low of the day, trading range day since the open. Bad follow through, always in short. Sure, it's always in short, but you're at the bottom of a trading range, and guess what? It's probably not going to be always in short for that long. So, guess what? Next thing you know, it's always in long up here. That's because it's at the bottom of the range. Bears who are short or shorted up here have to get out above this bar. They probably would get out below this low one. So, I hope that makes sense. When Al says always in short, he doesn't mean, you gotta understand this. Always in is a swing trading method to trading. Swing trading. So it sucks. Always in sucks when you're in a trading range. It's doable if you can flow flexibly. You buy above this bar, you don't get out here, you get out second entry short, gap up. And then, if you sell, you got to get out of shorts again. Then you buy up here. Then they'll break above the high, you sell. Then what do? Maybe you get out here, do you get out here? Probably not. And you probably get out here, probably go long above one of these bars. Then you ride it to the top. Well, now we have a second entry short back at the high of the day. Probably get out of shorts here, lower high, or get out of shorts below here. If you're quick, you sell. But then what do you do down here? You probably got to get out somewhere down here. Then you go long. And then you got to get out of here. So it's profitable. But, if you have to, rewind what I just said and listen to all the reversals I just had to point out. It's tricky. So let me speak in generalities. You need, okay, if you're in a strong breakout, the only thing to do is sell. If it's a bear trend. If it's a tight bear channel, the only thing you should do is buy, but be aware it's a channel and it'll evolve into a weaker channel. If it's a broad channel, expect 50% pullbacks and look to sell. Look to sell 50% pullbacks. So for this person, the biggest thing I would tell you is this. If you're going to trade always in, understand, first say, okay, when Al says always in long, there's always a quicker place to get out that he would get out. Second, you can make, I'll be honest, I think I truly believe this. I don't catch near as many of the bids as I like to, but I'm getting there. Number one is this. Perfect always in. If you did it right every single day, you could easily average 10 points a day, possibly 20 points a day. And I'll make that claim. I will. And that's if you can truly flow back and forth. I'm not to that point. I have no problem admitting that. I'm to the point where I can't reverse every signal bar. And when I say that, I simply mean you buy short, buy to go long, go short, go long, go short, go long, go short, go long, go short. It's hard to do. What I've learned for me that works best for me right now is buy, get out, maybe go short. And then buy, maybe get out, maybe go short, and buy. Just pick a direction. If If it doesn't look super clear to me, and I know, okay, I'm thinking, okay, always in long, decent short, but I'm already long, I need to think about getting out, I'll just get out, and then I'll just wait. And if we get this, then I'll happily buy. But so take it in steps. First things first is this. What I would say is, okay, figure out, usually the best signal bar of the day leads to the always in direction. So gap up, always in long because it's a breakout. Good bar 1, and good bar 2, but gap up plus bar 1 makes it always in long. Second entry short probably will touch the moving average, and so yeah, always in long moving average. I'm not going to talk about each day. I talk about always in every single day for most days. So look back over my videos, and what I would do if you really want. I'm saying the same thing I was saying for always in. That's where I'm getting it. Now, granted, I'm starting to be able to see it and pretty much know what at the end of the day where he would say it's always a long and short. I know, and I got this all from Al. But look back at my videos and you'll see. You'll see always, and I'll talk about it. So, and I'll try and remember. I'll try and start saying always in as soon as the video starts, to make it easier. But it just takes time. So starting out, here's what I would do. And by starting out, I just simply mean learning always in. Here's what I would do. Regardless of where someone's at always in, if they want to get good at it. First things first. Trade the clear always in direction. Always in short down here, yes, but bulls are going to get out above. Bears will get out above the bull bar and will probably go up. Don't do that. Say always in long, I'll buy. Well, am I going to get out? Maybe. Okay, so I'll get out. Wait for the next clear buy until it's clearly always in short. Don't sell. And if you could, try and get out below signal bars when it makes sense to. Otherwise, set targets. But for now, that's all the time I have. We will talk. I'll talk more about this later. But just pay attention to what I'm saying with always, and I talk about it every day. And hopefully that's helping. Let me know if you have any more questions. Thanks.